Alright, welcome guys to a new video. This video is going to be about determining the daily bias. So this is how I determine the daily bias. It could be a different approach from someone else, but I've learned everything from ICT and this is how I do it. So I take no credit for his concepts. So let's see how I determine the daily bias. I'm going to go through a few steps with you. First, we're going to look at the 20, 40, 60 days back in time, because the algorithm refers to price points in the past, right? So then we're going to determine the trading range. We're going to look for old highs and lows. We're going to look if we're in premium or are we in discount. Then we're going to determine which PD arrays are getting respected. And eventually you want to stay with the institutional order flow because that's the way you want to trade. You want to go with the flow. Um, the hardest part of determining the daily bias is the draw on liquidity. I've got a dedicated video on it on my channel, so if you want to look at it, it's available. So yeah, let's look at a few examples. So right now we have the dollar index over here. It's a clean chart without markups, so just have a look at it and try to see what's happening. All right, let me put some markups on it. So on the left we have a pretty easy to spot range, and ranges are not always easy to spot. So let's take this example. So we have a clear swing low, right? We're going into a clear swing high, and now we have a new trading range. So on the left side we cannot really see it, but there's probably a buy side and sell side liquidity taken out, and that's how you get a new range. So you see price trade down into discount. These are OTE levels, my favorite levels on a price chart. Price rejects from it, creates an intermediate term swing high to fake out sellers, and people put their stop loss if they're in sales from here, trail the stop loss here, and that gets taken out, and we're forming a new range right now. So this range is a little bit more harder to spot, and that's because we don't really have a clear swing low, right? So if there's not a clear swing low, I like to take the point where the price move actually happened from. So we have this down close candle, which is an order block in its sense, and price moved aggressively up. Now you see the 20, 40, and 60 days down here. That's obviously from the current day. But if you would not see all this price action, obviously these lines go back to the left, and then you're gonna go back in time and see where the swing high and swing lows are. So now we're in a little bit more difficult range. Um, so let's go to the next slide. Now, for instance, if we didn't see the price we just saw, what are we gonna do and how are we gonna determine where we're going? Because we're in a consolidation, it's pretty hard to determine where your price is gonna go. So we just have to look at the PD arrays. Which PD arrays are getting respected and which one should it draw to? So this is Thursday's candle. So where should price draw to? Now we've seen this high get taken out and this low getting taken out. So we're actually creating a new smaller range inside this big range. So now we have a price range to trade in. So where should price draw to? Price wants to deliver price efficiently. The algorithm wants to deliver price efficiently. So it's going to look for imbalances to fill. And we can clearly see one imbalance over here. So let's mark it up. So actually we have a smaller range, right? Like I just talked about, and we have this fair value gap. So price should draw into here. If the bodies are closing inside, there's a chance we're gonna reject and move down. So let's see what the next daily candle does. So the next daily candle actually closes inside this fair value gap. So, but this is a Friday's candle. So the new week, we're not sure where price should head to. Now I don't trade on a Monday, and especially when I see this, because we don't know if the next daily candle is gonna take the high and close above, or if it's gonna reject just like the previous daily candle and move down. So now, right now it's important to wait, so to have patience in this area. So let's see what the next daily candle does. So now you can clearly see this fair value gap is getting disrespected. Now, when PD arrays are getting disrespected, that's a sign that the order flow is changing. So we were in a small bearish order flow over here. We created a bearish PD array in the form of a fair value gap. Now this should stay respected if we are bearish, and we should not violate it like we just did with this daily candle. So now instantly my daily bias is gone from bearish to bullish. And that's why I wait. I want to see certain things get respected, and this clearly got disrespected. So now let's see what this next daily candle does. It should draw and take out those highs, and eventually it did. So now you just gotta wait and see what happens. My target, like I stated in the Telegram group, was I wanted to see 100 get hit, and let's go to the current day, and we actually traded above 100, and now price is in an area which for me is hard to determine where we're gonna go. So I'm actually waiting for a new swing high to get created. So if the next daily candle wicks up and closes below, we have a new swing high and we have a new trading range. And then we can go all over again, creating a new price range, determining where the premium and the discount is, and then we're gonna take a trade of the correct PD arrays. So this is, in short, how I look at determining the daily bias. ICT has a dedicated video about it too. So go to his YouTube if you want to have a more detailed explanation. I think it's more than 1.5 hours long. So this is a pretty short explanation. But this is how I look for the daily bias. And let's head into a simulator and practice what we just saw here. Alright, so we're at the simulator right now. So let's pick a random date and practice what we just learned. Let me get a random date. Again. Let's just click. Alright, so 18th of November 2021. Let's do that one. 2021. November 18th is on a Thursday. So let's start on a Monday, because that's the beginning of the week. Alright, so let's get the daily, the monthly, weekly, and daily chart out. A price is fractal, remember, so you could actually use your daily time frame. You can use the 1 hour time frame, and you can enter on the 1 minute. But I like to use the monthly, weekly, daily, and then enter on a 15 minute or a 1 hour time frame. It's just what you prefer. Right, so let's open these charts. Right, so let's go to the monthly. What are we seeing on the monthly? We actually took out this previous monthly low already, so we're trading inside this fair value gap, but so let's see, on the weekly we've got more information, so let's go to the weekly. The weekly order flow, bearish, so we're gonna look still for bearish movement on the weekly time frame, but now we have to determine in what daily time frame price range we are trading in, and then we can determine our bias day by day. So most logically is it will draw to this sell side liquidity, because this is an obvious swing and we're in bearish order flow, so let's keep that in mind. Higher time frame bearish. Alright, so now we've got the daily time frame. Let's see in what kind of range we're trading in. So right off we can see we took this sell side liquidity, made a new low, traded up, took this buy side liquidity, bounced off this order block, and we're creating a new swing high, and we're trading down again. So how are we gonna determine where we are in the range? So we have swing high, swing low, swing high, and a potential swing low, because we need this candle to close higher up than this wick it just created, then we have a new swing low. So we're anticipating this to be the range. So I use a fib. Everything above equilibrium is premium, and everything below it is discount. So straight off, I don't trade on a Monday, so I want to see how Monday develops. If we create a swing low, that means the wick will respect this low, and we have a new swing low. I'm expecting price to trade up into equilibrium and higher to get better pricing before we drop again. So let's skip Monday. Alright, so we have a new swing low, new swing low, excuse me, a new swing low created. Now we tapped into this fair value gap, but I'm not convinced yet we have the right price to go down further. So I would like to see Tuesday trade up. For the weekly, if we look at the weekly time frame, we can trade up a little bit more in this volume imbalance up here. So this is the gap in price. Fill that in and then drop again. So let's see what this day does. So we almost touched equilibrium. If we would use the bodies on the daily time frame, which is more common, you can already see we tapped into equilibrium. And if I draw out this fair value gap, this should actually be enough for us to go down further. So let's, for educational purposes, keep it on the wicks. Now you have to go into the lower time frame to see how structure is forming, but seeing how this forms right now with these long wicks, I'm expecting there's a bearish structure forming on the 1 hour, because this wick is on a daily time frame. It consists of 24 1-hour candles, this whole daily candle. So I'm expecting a bearish candlestick formation and a structure. So the next day should go bearish. So we determined our range, right? We want to let it trade up into premium, and it needs to respect the PD array. So the PD array is this fair value gap. We're just about traded in premium if we take the bodies of the candles, but not quite with the wicks. But on a daily time frame, sometimes if you have large wicks, it's better to use the bodies. So I would expect the next daily candle to go down. So we're trading up even higher. So we're respecting the the wick range. So that's actually good. So let's see what the next daily candle does. So now we're forming a potential swing high. If this next daily candle has a down closed candle, we're gonna go down. So we're gonna wait. So now we have a new swing high. So swing high, swing low, swing high, swing low, swing high. We're respecting this fair value gap still. So now in the next few days we should take out this low. This is another trade opportunity, and then the next candle or the day after should take out the low. So now we're taking out the low. And it was good to take the wicks on this occasion. You can see clearly we're in premium. We're respecting the fair value gap with the bodies, right? Once you see a new swing high created inside the range, chances are we're going into a bearish order flow. So now you could have gotten tricked by this long wick and it's closing below the fair value gap. But patience is really key when you're trading on a daily time frame. I had no insight on the lower time frame, so I could not assess the structure, but waiting for a swing high to be created inside the range you're already trading in, and it's in premium, and you see rejection, then the bias is clear and we should go down as we just witnessed. And now we've poked down below it. Price can do whatever it wants. It can go back up again and find a better pricing to go down again, but I'm not sure what it's gonna do, but I feel like we're gonna go down anyway further, because on the weekly time frame we still have this low to reach. So let's see what the next daily candle does. Yeah, so we're gonna go down deeper, and now you gotta be patient and wait for a new swing low to get created, and then you have your new trading range where you can assess the premium and the discount levels again, and then you take your trade of the right PD array. So this was just an example, no entries taken on the simulator, but you can see how you can assess the trading range you're in and where it should react of. So I hope you learned something from this video. If you did, please like, comment and subscribe on the video, of course. I have a free Telegram. I'll post it in the link. I do daily analysis there, and every Sunday we're doing a public Zoom so everyone can join. I'm gonna analyze all kinds of different currency pairs. We're doing like Euro USD, GBP USD. I'm doing gold. I'm doing sometimes indices. And if you have a request, I can do that, of course. So yeah, I hope you learned something, and I'll speak to you in the next video.